Hello, howdy, and happy Monday. It is the last week of 2021. Monday Market 15, the Monday show. I forgot. I'm flubbing it up. So Monday Market 15, the 15-minute show that takes about 30 minutes. So I'm here live talking about the Phoenix housing market with my co-host, the lovely, the beautiful, the most anticipated, in a leather jacket today, Ashley Miller. That's right. She's back, everybody.
Everyone,
back in action.
And happy holidays. I don't know what's appropriate. And the New Year is around the corner.
Happy holidays, Happy New Year's, all that good stuff.
We'll just wrap it all
We're
up.
rounding the corner.
Happy Kwanzaa. I think it's Kwanzaa today.
Is it Kwanzaa today?
Or yesterday. I don't know.
I'm not a Kwanzaa night. If that's appropriate to say. But again, we're here on a Monday just talking about Phoenix housing and the new things and the coming things, the predictions for 2022. Right, Ms. Miller?
Yes, I learned a fun fact from Robert today. Which,
shit. There's a lot of fun facts.
And there's so many fun facts. And this was a really cool one. So did you guys know that the third week of January will technically predict where we're going in the housing market? Can you pull up that stat? Because I thought this was very intriguing.
Oh, you want me to pull up? That's the end of the show,
I know,
but I will. I guess
I want to pull it up now because I thought this was so interesting. Because my cousin had texted me this morning about her daughter. My niece, which is not really my niece, but to pull it up. And as we looked at these stats, I thought this was so interesting.
So this is the housing supply for the past few years. And the one interesting fact that I wanted to bring up with Ashley, I think you can, let me get my face out of there. I'll put it in the middle.
Your face.
I know, but you can't see the chart. You can't see the important information that we're supposed to be telling everybody. So the one thing that I wanted to point out to Ashley, at least for today's show, is like, predictions for the housing market. So predictions always about looking forward and trying to predict what's the likely outcome. Where these reports are lagging indicators, so they provide information that happened in the past. So does the past always equate the future? Not necessarily, but you do see patterns in that past. So what I wanted to point out, what I was showing Ashley, is like every year, January, the third week of January, like you see spikes. So January 25th.
Third week.
So you see a spike in inventory coming on market, and in 2014 you see a spike January 24th, 2015 you see a spike January of 2016, all in that third week, January 21st of 2017. And these are the peaks of inventory every year. So this is the third week of January that you want to pay particular attention to. 2019 you got up here January 26th, 2019. Over here, January 25th, 2020. We did have a spike just after the whole viral thing.
Well, sure.
But that's an anomaly. That is a complete anomaly. As you get into the later years, which are closer to 2020, you can see here our spike, January 23rd, just went completely down. Based on the patterns, now that gave a prediction of the coming year, which was just filled with competition, filled with higher prices, just low inventory, plenty of buyers, just no listings. And as we get into January of this year, we're still at that flat line of.
Can you move it over a bit?
Let me move it over a little bit. We're still at that flat line of housing inventory, and we're at the last week of December. So the thing is with the future, so if you're looking at pricing, if you're looking at getting into this market, pay particular attention to that third week in January. If we don't see that spike in housing listings, if we don't see that inventory come up that third week of January, anticipate higher prices, anticipate more competition because people are coming in.
So how do you make that decision, right? Because, the name of the show is don't get caught up in the moment. So we're in a moment right now. If we watch this chart, spike, and then we go further to the right, there's not quite a spike. So do we make a decision in the next 3 weeks? Like, we can't make a decision in the moment, or can we? Or should we?
If you're planning on getting into this market, if you've been holding out, again, paying attention to that third week in January or close to the end of January, if we don't see that supply, you're going to be facing competition. That's just bottom line.
Well, competition
and
has gone down. Interest rates will go up. There's no doubt. Interest rates are going to go up.
Well, they kind of have to. So why, are we doing that right now too?
Well, and not try to be all over the board, but it's like, how do we make that decision from now to that? We have a month to make a decision. Yep. A month. We have 1 week left in this year. Yeah. We have 3 weeks left till the trajectory of what we've been seeing.
Yes.
That gives us 4 weeks to make a decision. We're putting away trees and decor, and what are we supposed to do, Roberto?
Well, it's all dependent on what your situation is. I encourage people to always, you can never predict any market. We can have a complete, people say crash, whatever. We can have a complete pullback in the market.
Nobody can predict a crash, by the way.
Nobody can. So it would take something significant like what the virus did a couple years ago to kind of change things a little bit. With us continuing to be challenged with a new viral strain and everything that we're facing today, supply chain issues, it's really hard to predict where the Phoenix housing market's going to go. But these next few weeks, that'll be very telling of what the next few months will be.
Have I mentioned this before, the 5 Ps? Proper preparation prevents poor performance.
Oh my God, hold on.
The 5 Ps.
Number one.
The reason why I bring this up is because
write that down, everybody.
Whether we know what's going to happen or not, we always need to be prepared. And this is kind of where I wanted to change the conversation into what we had spoke about earlier was if we are looking into the new year, new year, new you, yay.
2022.
2022.
Believe it.
Everyone loves 222s. 222, except we had a 0 in there. But we have to prepare. Okay. And so I feel like regardless of where the market is going and what it had looked like before, if we are properly preparing, we're going to have good results. So in your opinion, as a realtor, how should anybody who's looking to buy or sell properly prepare for the next 4 weeks? Because this is tight.
Yeah.
It's a little like.
Well, I at the end of it, this is just investments, period, not just housing, but to understand your financial portfolio, financial situation, talking to people who are knowledgeable in what you're trying to do. If that's looking for a house, preparing yourself for that process means getting your credit in line, which means talking to a lender, which means talking to an agent, either myself or anybody you trust, really, and preparing for what that looks like. If you're purchasing a house, if you're purchasing other investments, that's fine too. You can talk to other people who are experienced at an industry. The challenge with anybody kind of helping you is their own agenda.
Right.
If you talk to an agent, they're going to tell you it's the best time to sell, best time to buy.
Always, every day.
It's just like, and very few of them really pay attention to what's your situation. Tell me a little bit more about what's going on with you and what are your goals, because your goals today could change in the next 6 months. Your life circumstances may change in the next few months. If you're going along looking for housing and then all of a sudden you have an oops and you have a baby on the way, that kind of changes things for you too.
Do you?
No.
Oh, you brought it up. I was
just trying to think of something that would be.
No, it is. And I loved where you had gone with interest rates are going to rise. We know that, right? Yeah. Interest rates are going to rise. So let's kind of pull that up if you don't have, or if you don't have, if you don't mind.
Pulling it back. Which one am I doing?
Interest rates.
Interest rates. Where the hell is it? We're out of order.
We are out of order.
You're going out of order.
The reason why I bring this up, because you said goals and then a baby and an oops. And everyone's so concerned in the next 4 weeks, interest rates are going to go up. But even if it changes by a half of a point, it's really only $120 a month.
So leading the conversation, we pulled up this article from MarketWatch and it talked about next year predictions, and the 4 that were in there were one of the 4 in there was mortgage rates increasing, which is what the federal plan is. You can't keep them in this low interest rate environment forever.
But these are still astronomically low.
Even at 3.5%. But I will tell you, and we will go to the next chart. Right here, I was just messing around with an amortization calculator. And this is a simple one. This isn't really designed for mortgages, but it just talks about loans. But something as simple as a half a point or a 0.5% interest rate increase. If you notice what we put in here, so $460,000 is about the average or median price of a house here in Phoenix. 30-year loan term. If you go at 3%, you're looking at a 1940-ish payment. Sure. And a total payout on that 460 is almost $700,000. So you're nearly paying $240,000 just in interest?
Yeah, but most people don't keep their home that long, so.
Yes. Correct. Yeah. But if you just for articulation of the point, miss. If you increase it by a half a point, look at that. It's $120 more a month. And for some people that's a significant increase. Some people can't handle an extra $100.
I concur, but people can also buy a $5 Starbucks every single day, but they can't afford $100 extra. So are
you commenting about my Starbucks habit?
I didn't even know you had one. I've never seen Starbucks in your office ever.
I do on occasion. I had to break mine. I just go regular coffee.
I'm just not a Starbucks coffee person. I don't even drink coffee, but there's certain things, if you think about it and you look at the numbers and you're like, okay, $120. You could save $120 a month by not buying.
But buying a house now.
Now. Yeah. By not buying, I don't know. There's so many different vices we have, right? But that number, that total right there, that's 743, 618 by 0.5%. There's so many things we could change in our lives.
I mean, that's nearly what, $65,000.
That's huge.
In just a 0.5%. So just a small little payment increase, percentage increase, is a significant amount for some people. You know, not only monthly payment, but what they're paying for a house overall. So in this low interest environment, there is some motivation to see what you qualify for today, even if you're like 6 months out from your lease end term. Sometimes it does take a few months to get caught up, you know, in a good or better financial situation in order to purchase a home or move forward, because rental rates are increasing too.
They are. And I love what you said about it takes about 6 months. So the cool thing about a lot of times when you're renting is they're very, I shouldn't say they're cognizant of when you're trying to purchase a home, and if you discuss it with them and you have that communication, they'll work with you. If you say, hey, in the next 6 months, this is my goal, and if I hit that goal and I find a house in 2 months, how can you work with me? Communication. And based upon our charts of what we're looking at, we got about 4 weeks to get our stuff together.
Our shnikes.
Our stuff together, because that's what it's about. And getting our stuff together leads into another thing I wanted to talk about is how many of us
Why's your head so big?
I don't know.
There you go. Let me shrink your head a little bit.
Why's my head? I do have a big head. When I was a kid, everyone called me bowling ball head, buffalo butt, thunder thighs, like, which is weird. Anyway, so getting our stuff together. You said my head looked big.
Oh, I shrunk your head.
Honey, I shrunk the kids.
Oh, boy. It is Monday. It's the last week of the year, everybody. Let's forgive and forget.
We're going to talk about, real quick, in home prices increasing. Yep. So we all Christmas shopped, right? And you had a wedding.
Yes.
You got married.
Yeah. Could you tell?
Oh.
Do I look married?
You do look married. You have a ring on your finger. Put a ring on it.
Yes. The point is what?
The point is paying off credit cards.
We only have 30 minutes. Yes.
Paying off credit cards.
Yes,
So credit cards, the interest rate, like I used on my credit cards during Christmas because I got cash back, blah, blah, blah. Yep. I have equity in my house because everything's going up. Maybe I take out a home equity line of credit. That's at maybe, I don't know, a 6%, or I do a cash out refi, or I mean, there's so many different options to do that and pay off some of our debt. However, there's a fear embedded in me with the housing prices increasing in the next 4 weeks. So if I do this cash out refi, hypothetically, will the housing prices change in the next 4 weeks? What do you think?
Potentially. I mean, the way I see things, the way I'm predicting the market going right now, and this is solely in Phoenix, I do see an increase in prices. And part of that, let me put that article back up. Part of the article does explain that too. And this is from realtor.com. There are two other significant things that it points out. There's going to be bidding war still. And this is general in the housing market, period. So I'm still seeing that. We got into contract last week, and the listing that I had, we obtained 5 offers. And it's under the $300,000 price point. So we had 5 offers on it. But you're not seeing those $50,000, $60,000 over asking prices. You know, the relatively speaking, I'll show that in the next chart, they're small over asking price, you know. But what is being predicted is this continued bidding war.
Should we fear, though, for offering over asking after we hit February, March, April, May?
The way I see things, prices and competition will be up even. It'll either be equal to, if not just about average. Whatever average is.
I was literally just
so January last year, we were getting about 20, 30 offers on a house. And now I'm seeing about anywhere from like 5 to 6. Which is a good thing. You're not seeing as much competition, but you're still getting 5 to 6, and you only can accept 1. So as long as there's 1 or 2 out there continually being out there on a house or a listing, you're still going to have competition. So you still have to be a little strategic, and you have to run good comps on the house to ensure that what you're offering is within the range of an appraisal.
So being strategic, correct. So I'm a new home buyer.
Strategy, yes.
And I want to purchase a home.
Yes.
I know I have, well, they still need to understand their options, right? We're going to talk about young buyers. They're watching the market. They're probably actually not necessarily watching the market, but they're listening to things, TikTok, Facebook. I mean, let's be honest, that's where everyone gets news from. Nobody turns on NBC on their, and if you guys have cable, like, God bless you. Like, I haven't had cable in forever.
You're a TikToker if you're like 25.
I'm 25 every day for the rest of my life.
That's that complexion she's got.
No, but so understanding the market. So now we're here, and we're a new home buyer, and we're hearing all this noise from everywhere. How do we make a decision on what to do? So do we consult with a realtor first?
I think overall the first part is to understand where your credit's at. I think that's your whole life. You from 18 plus a day, you should really try to work on establish your credit. If you have parents who are mindful of their credit or their history or who they are, or where they're at financially, getting established credit wise is one of the smartest things you can do at 18, and not overextending yourself. I mean, one of the things you're gonna have to do is get some sort of credit history going.
Right.
You can't be a credit ghost, because if you're a credit ghost, you're not establishing any good credit, and you can't make larger purchases such as a home, which is an investment. Car, not so much an investment, but you do need a better score to get a better rate. If you don't have a better rate, then you end up paying more for a car than you really should. So especially right now with inflation.
For these newbies coming in and they're listening to this news,
yes, I
think the biggest thing is, well, there's multiple facets of this. Not to be fearful. Make sure they have good credit. Talk to a lender. Talk to you, or an agent that will actually take care of them.
Well, and I think the scariest thing for most people making any large purchases is really ignorance, and not ignorance in terms of being a negative. It's just like, I don't know all the information. I'm not like I don't expect somebody that doesn't do real estate to know everything about it. And I do appreciate when a client or somebody I work with just blatantly trusts me and doesn't read all 9 pages of the contract, doesn't read all 6 pages of a listing agreement. And they're just like, okay, where do I sign? I trust you. There are not knowing. There's just so much information.
We don't know. We don't know.
Yeah, and the thing is to learn and learn as much as you can. And you can't necessarily take in all the information and make the best decision. You actually have to trust people out there. Which is I think the biggest fear out of this whole thing is just like, who do I trust, and do I trust that person enough that they're not going to sell me on something I don't need, or are they going to sell me an agenda?
Well, and I so going back to like the next 4 weeks, because this is like, it's triggering.
This is critical.
It is critical. It is critical the next 4 weeks. So if you are somebody who's looking to buy, sell, or a new home buyer in that age range, it's definitely important to watch the market. So we're going to put up a website on here.
Oh, yeah.
Below. I can name it. It's azeconomy.com/Arizona/housing, but we'll put it in there. This will give you a good indication of what's happening in the market, whether it's Phoenix to Arizona. But truly watching and reaching out to the people that are closest to you and not getting taken advantage of, watching the market, being cognizant. We have so much going on. There's no, you know what? And this is why, don't get caught up in the moment. And this is what the show is about. There's so many moments we're having right now, and it's so tight knit, and there's no need to feel pressured, but there is pressure. There is freaking pressure right now. Well,
I will say, to get a head start on anything you feel that you're ignorant in. Like if you feel you need more information in housing, if you feel you need more information in financial services, investing, immerse yourself in it. Don't always follow one person, because again, they usually come with an agenda. They usually have some sort of narrative they're trying to tell you. Usually follow a couple different people and get more and more information over time. So the one thing like I did when I first started investing in stocks and started trading was just to get into watching YouTube videos. YouTube University is really a good place to go. But also reading books about it. Warren Buffett is a good one if you want to get into stocks trading. And then follow the books he followed. Understanding is immerse yourself in it as much as you can. then over time, when you start immersing yourself, over time, it'll just become part of you. It'll become part of the narrative. You'll make your own decisions regarding that. Same thing with housing. Same thing where you're at in life. I would start, and I wish there was education. I wish there was classes, and I wish there were parents that were more attuned to that. Definitely not my parents. They didn't really understand how housing worked and really how investments worked. And my dad's idea of investing was to retire out of the state and live off his pension the rest of his life. Yeah. There was no investing there. There was no financial growth there. And so unfortunately we don't have programs, and I wish there were, that taught our children how to invest.
That's what we should create.
That's what we're creating here.
We should create it. We should create it.
We're starting with this YouTube channel.
But getting caught up in the moment is, gosh, how many times are we all getting caught up in the moment?
All the time.
Ryder, Cameron, and Colby.
Are we taking a survey?
Just kidding.
Please, if you want a survey.
So I think we really just need to be more cognizant of decisions we're making. So let's just reiterate. Let's go back real quick. Check out the next 3 weeks. Pay attention. We'll put some links below. Well, we, meaning Robert, will. If you did run up your credit cards for the holidays, do talk to your first lender. We have some amazing lenders that Robert and I work with where you can take those 23% to 38% credit card deals, and you can do a home equity line of credit at lower. You can do a cash out refi at lower. And then for the adults out there, like parents out there that have young adults that are looking to purchase a home, have these conversations with your kids and prep them, whether they're before they're 18 or after, or they're in that process right now, and finding somebody who's not going to take advantage of them. And I say that in a non-condescending way. I say that in a way that, like my cousin called me this morning, and I'm reiterating about, my niece/second cousin purchasing a home. I'm like, yes, like our title company, we have family discounts. We're going to give you a discount. I have amazing real estate agents that we can find you a home. We're going to look for you. If you're working with an agent that says, oh, you can search yourself. Well, yeah, we can all search ourselves, but like, I want to help her. Like, why would you search yourself if you don't even know what you're approved for? Yeah. So finding the lender that's going to do that and work with you and give you the best interest rates, give you the best products that work for you. She's a young 21-year-old girl. Yeah. Does she have enough money for a down payment? Can she do a DPA? Does she want to do an FHA? What does that look like? What can they afford? Are they providing an amortization schedule, a chart or calculator like Robert was? Are they looking at the past year's predictions? Do they know the economy? Are they like Robert, who's on the comfort report and doing all of that? These are all the things you guys need to consider, because when you're like, you meet an agent, your best friend, you're like, oh, my mom's an agent. Oh, they know a lender. It's my cousin. And you guys, we have to truly pay attention to what's really happening. And that's why Robert brought about the financial market. Why did he start looking at YouTube and watching YouTube videos and understanding that where to invest his money? Everything that we've ever talked about from the time this show came into fruition is about education, 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 and communication, and having the right people on your side. So not that I don't trust in people, but let's be quite frank. There's nothing in this world that we can truly trust in except our own intuition. Yeah. And our own intuition is our own research, our own, I don't want to use the word documentation. That's totally the wrong word. Our intuition, recon, really just figuring out where we are, where we were, where we are, and where we want to be with the right people on our team.
Yeah, and I think who the right people in your life are. And I mean, on every level, between relationships and the people in your life, you kind of know who's good and who's not so good.
Maybe we should have a relationship show.
Maybe we should.
Oh, wait, don't you already?
Why? We kind of do.
Okay.
Just not lately. But anyway, so it's
sorry. Totally.
You're really random today.
What have you done for me lately? I've been stuck in the house for like a friggin' week. So. Oh boy,
but no. So establishing that trust, and I think the thing that people feel overwhelmed with the most is when there's so much information. It's like, it's just too much. You deal with it.
It's like drinking from a fire hose.
Yeah, it's just it's so hard sometimes to take in and digest all the information because there's just so much of it, and you get a little overwhelmed and just kind of drop it and walk away.
It decision fatigue. Yeah. Decision fatigue. And that's why Robert and I are here. So
we're here to decide for you.
We're not necessarily, but if
we're not financial advisors. Do not follow any advice we give.
Pay attention. Where do you want to be in the next few months before spring? because spring is, it's predicted in June is when things are going to change.
Yeah.
So where you are now, whether it's financially, family, and you said having a baby, you guys are going to have a baby.
That was a joke.
Your credit cards from the holidays, like really take an inventory. Get out that Excel spreadsheet. Take an inventory. Do it in the next couple of weeks. We have time. People are off work. Just do it.
I would say if you're renting right now, the only advice that I would give any renter, because I do see prices going up in the rental market, is to consider purchasing versus renting. You know, with prices going up, it's a smart investment decision, period. You know, as far as purchasing, but do have their costs and benefits to each one of them. But again, I think housing in itself, purchasing is probably the way you want to go in the short term. Long term, there could be some corrections made in the next year to 2 years with the interest rates going up. So it's a long term versus a short term decision at the end of the day. Well, so are you a long term investor or are you short term? Are you just looking for a house? I mean, renting gives you that flexibility, but are you getting ready and anticipating the increase in rental rates?
Well, renting is 100% investment in somebody else. I would love for you guys to rent from me. I'm actually going to purchase an Airbnb, and I'd love for you to invest in me 100% and pay my bills for me. But at the end of the day, being a person like how Robert and I have a show, like we want you to purchase your home. We want you to invest in yourself. So it's just taking inventory and figuring out. Like I'm always all over the board. We always know that.
Yes.
However, at the end of the day, it's the same exact concept. Same exact thing. Yeah,
and I think bottom line, educate yourself, understand a certain market segment, whatever you're trying to do, learn more about it, and take the time to learn it. Don't just blow it off and expect somebody else to do it, or trust your cousin who just got their license last week. You know, I'm sure your cousin is well, interested in you, but again, being educated and sharing. Oh.
You're somebody's cousin. Just kidding.
Anyway, we're in the last 2 minutes, Miss. So I'm going to go over these last couple stats real quick, just so we have them. Just so you show, we're closing the year off at a very high index still. If anything, this has gone up since July this year, or it's been remaining consistent. Very low supply. Green means low supply. Red means high supply, which means there's a lot of houses out there. Demand, again, in the green, meaning there's a high demand. Yellow is a balanced market, and we're nowhere close to a balanced market as of today, as of the last week of 2021. Combined with, this is actually slowed down. So this is the closings over list price. So if you're in the market and you pre-qualify from 2 to 300 or 300 to 500, there's different ranges, but what I want to point out is just the listing over price, the offer price over list is roughly about 10,000. So whatever list price is out there. So if you're looking for homes at 275, for instance, anticipate and I even consider and talk to your agent about considering throwing in an offer 10,000 above, because that is the average over list price.
Yeah, anywhere from 250 all the way up to 600.
Once you start getting into the 600s, sure, it kind of goes really high over there. So, but we're still in that environment where it's still competitive, and you saw on the very first slide in the supplies where we're just in that competitive market. Will that change? Will that shift? I don't anticipate any major shift.
I don't either.
Until at least June.
June, you guys, June. Hey, June.
That's Jude.
I know.
Oh, you can sing if you want.
No, I'm a terrible singer.
But that's it as far as stats go. So as far as the end of the year, I want to take a minute just to thank everybody who's watched our show. It's been a year in the making. We've switched studios, we switched offices.
Has it been a whole year?
Just about, yeah.
Really?
Yeah.
I thought it was like yesterday.
Feels like yesterday.
Is there a song about that?
And I'm honored and appreciate everybody that's been involved and shared their comments, shared their likes, shared the purple hearts. If you have purple hearts, some extra ones in a box. Ashley loves purple hearts.
I do.
But we're coming to the end of the year. I'm looking at YouTube. We've increased our market share in YouTube. Oh. We've gone from about 200 at the beginning of the year, 200 subscribers, to now just over 3,000. So I'm very, very honored and proud of that. Some of our shows, we've gotten up to, 9,000 views on our shows, and we've really come a long way. And I anticipate us continuing on, Miss.
And I'm really excited that, your show is that you have so much diversity, and I'm just here on Mondays. And I shouldn't say I'm just in here. Mondays are...
You're here every day.
Monday.
We just do the show on Mondays.
I would love, absolutely love. I mean, here we
Purple
are
Heart
hitting. I do love Purple Hearts. But 2022, what do you guys want to know? What do you guys want to hear about? You know, Robert and I are always trying to be innovative. And at the end of the day, we do come down to the same thing. But what does everyone want to talk about? What do you guys want to hear? Do you want, do you want Robert to wear like a purple wig? Some bows in it.
That'd be kind of weird.
I mean, I don't know.
I would. I mean, if
you know, to make it fun and innovative,
like
what do people want to hear about? We have some stats. We come up. We talk about weekly. It's not like we can truly prep because things change daily.
Yeah, and as the new year comes in, we're going to bring more information. We're going to sit down and now that things have calmed down, wedding wise, life wise, Christmas wise, we have a new event coming up in January for our CEO network. It doesn't stop, but at least it's calmed down.
No, it never stops.
Real estate is still kicking up. I mean, I have a number of things I need to do. We just got into the contract last week. So there's so many things that are still progressing and moving forward. I just want to take a minute and say thank you as the year ends, as the year closes up.
And you can always buy dirt.
Yes. She means land, by the way.
Land, I know.
In Morristown. If you're into Morristown, it's a good
It has been such an incredible, crazy 2021. And I have zero doubt that 2022 is going to be just like fireworks. Like if I did a voice like Katy Perry, I would probably sing right now.
Oh, boy.
But I don't.
Is that your ending speech for 2021?
It is. 2022 is just going to be such a phenomenal, it's an angel year. 222. It's an angel year.
Is that what it is?
It is. It's a year full of gratitude. Well, but the twos are in line. So it's going to be a year of gratitude and fulfillment and education and prosperity and everything that we would have wished 2021 was about, but unfortunately, not all of us got to experience that.
So go ahead and leave your comments and questions and anything else that you want us to embark upon. Again, thank you again. 3,000 subscribers on YouTube. Roughly, it's been an interesting journey and love you all. So we'll see you guys Monday Market 15 into the new year.
New year.
Adios.
Bye.